everyone. How are you today? Hey, listen, I want to talk to you today about SBA loans. I want to clear up a little bit of maybe the fog that's out there. A lot of times people don't quite understand how the SBA loans work. And the first thing I want to tell you is that the SBA EIDL loan, which was a disaster loan, is a special loan, is the only loan that the SBA does themselves. The SBA does it on their own. That's the only loan. Any other SBA loans, whether it be the SBA 7A, whether it be the SBA 504, those loans are not done directly by the SBA. The SBA has given authority to banks to give those loans out to small businesses, and all they do is they guarantee the loan. As a matter of fact, when you are doing an SBA loan, at the end of the loan, you are going to pay a fee anywhere between 2.25% to 3.25%. Of that fee is what goes into the insurance money pot that the SBA puts the money in. So in case there is a default, they can take from that money to pay the bank that lost money. Okay, so the SBA will guarantee loans anywhere between 75 to 85%. Okay, and this is what makes the bank comfortable with the loan. Now, these loans are very lucrative for the bank, and they're very well secured because the bank is guaranteeing, the SBA is guaranteeing about 75 to 85%, right? So if you are an investor, you're a bank, you know that your risk is about 25%, or here is about 15%. So you don't have too much of a risk. So what does the bank do? They want you to come in with the 25% and or the 15% down as injection. So I'll give you an idea. I'm going to come back to this, so I'm going to move this page out of here. All right, we're going to bring it back. So what I mean by that is this. If you were doing a loan for $1 million, let's say you want to buy a business that costs $1 million. What's the SBA is going to want, or your lender is going to want you? The lender is going to say, okay, this business costs $1 million. We want you to bring in 25%. So I'll put 25% here. 25%, which means $250,000. Okay? So this is what the bank is going to want you to do. They want you to bring $250,000, and they're going to give you a loan for $750,000. Now, on this $750,000, what they're going to want you to do, they want you to give them collateral. Okay, this is going to blow a lot of people's minds. They want you to give them collateral. What does that mean? They want you to give up equity. Okay, they're not going to take it right away, but they want to put a lien on your house. So if you own, say, $1 million home that you bought 15 years ago, and you have, let's say, $500,000 or $550,000 of equity in that, they're going to want to take a lien on this $550,000. So that means $550,000 has been added as collateral, right? So now we're still $200,000 short on collateral. So what are they going to do for the $200,000 that you're short? Because they put a lien on your home, right? Or commercial real estate, whatever real estate you own, they're going to put a lien on that. If the company you're buying has equipment, let's say, worth $200,000, or equipment worth $400,000, they're going to take a lien on the equipment. They're going to take a lien on the equipment, so they want to know, all the information and the equipment. They want to make sure the equipment is free and clear. If you don't have equipment, I'll bring this back up. All right. If you don't have equipment, they will ask you to get a $200,000 life insurance. Okay? Life insurance. So they're going to ask you to give them, to get a $200,000 line of credit for the benefit of the bank with you as the insured. Okay? And them as the beneficiary. So in case of your death, they will recoup the money. This is how SBA loans are done. This is how SBA loans are done. And this is the reason why I tell people, if I was to start over, I will buy an existing business and grow it, right? Rather than me starting a new business, because it's difficult. But this is what will happen if you're buying something that's, let's say, that's already producing cash. But if this business was a brand new business, they also might ask you to have at least 30% of the $1 million in reserve. This is why it's very difficult to get SBA loans. However, they are the best loans given to small businesses. Do you know the reason why? I told you this before. We can go back to it. Because SBA loans are guaranteed by the SBA for 75 to 85%. Normally, what banks would do, if you want to do a loan for $1 million, you must, if they were doing a regular bank loan, you must have a net worth, meaning your wealth has to be equal to $1 million. If your wealth is not equal to $1 million, most banks will not lend to you without the SBA guarantee. If you were doing $1 million loan, just make sure. And the things that are important, number one, you must have collateral, or it's going to be a tough loan to close. You must have good credit. And remember, SBA only guarantees 75 to 85%. New businesses must inject anywhere between 10 to 25%. Now, the question you're going to ask is, when do I inject 10% or when do I inject 25%? Generally, if you're buying business that includes real estate, right? Includes real estate, you might be in luck because the real estate is going to be used as collateral. So that will be, for you, you might have a possibility, depending on the value of the real estate, you might have to put in only 10%. Or you're just buying real estate. If you are a business owner and you wanted to buy, you have $500,000 and you want to buy a building that costs $5 million, the SBA will do it for you with only 10%, including all the costs. So including all closing costs. So even if the closing costs, let's say you have to fix up the building a little bit for another $500K, you're only going to put 10% of $500,000 in. So including all the closing costs, all the soft costs, you're only coming out with 10% when you're buying real estate. Let's go, page number 2. I love this thing, isn't it? Great. If you are buying just a business, the business alone, only business, right? Business does not have commercial real estate, then you most likely will be required to put down 25%. So if you're buying $1 million business, just so you know, you're going to need $250,000 cash and $750,000 equity and or real estate as collateral. Okay? This is how SBA loans work. And next time I'm going to talk to you a little bit more about this, but I wanted you to get this. Okay, so remember this. I'm going to go back to our pages here. Page number 1. Net worth generally must equal the purchase amount. Whatever you're purchasing, your net worth must be equal to it or close to it. This is something they look at. SBA loans, only SBA does not do loans. SBA only guarantees loans of 75 to 85%. You must have collateral. You must have good credit. You must have the SBA only guarantees, and business must have, you must inject anywhere between 10 to 20. I want to tell you now. Now, all of this may scare you, but I want you to know there is an SBA loan out there for new and existing businesses, whereas a new business can get an SBA loan to get started, which to me makes sense. You don't need much money to start a business, really, if you know what you're doing. They will give you $150,000 unsecured cash loan. There are some conditions, right? You must have at least 30% of this money to inject. But the good thing is so you have, let's say you have $50,000 in a bank, they will give you $150,000, and they want to see that you have at least another $50,000 in reserves, right, in case there's an issue. So you have to have at least $100K, but they will give you $150,000 to build your business. So just you guys are out there, want to start a business, this is what you're looking at. If you are an existing business for the same SBA Express loan, right? As an existing business, they will give you up to $350,000. Up to $200,000. You must be in business for at least 2 years. And then again, this also is unsecured. All right? So 2 years in business, that means you don't need collateral. 2 years in business, 2 years tax returns. 2 years tax returns. Credit, of course, must be good. I recommend 700 plus, but you can get it with less. And you must be profitable in the last year of tax file. Last year tax file or current year as well as current year. So if your last year tax file was 2021, and in 2021, you must have had at least a profit of, let's say, all bills paid, because the payment on this loan is about $4,000 a month. That means this is $48,000 a year. Multiply this by 1.25, which is the debt servicing ratio that they want to see. So we'll probably have to show at least about 60 grand, and I'm just extrapolating here, 60 grand in profit for the last year of tax file. Profit meaning the owner was paid enough, right? Enough to cover their expenses or whatever is on their credit, and this is pure profit. Now, if you are S corp, Then let's say the owner's expenses are about $50,000. So in order for this to work, the owner must have paid themselves at least about $110,000, right? And they pay taxes on the $60,000, which is this if the the profit flew to the business. So you have to make at least $100,000 and $110,000 in profit in order for this. But if you're a C corp, then the owner must be paid enough to cover their expenses, and they have to net at least $600,000. Basically, it's how much you pay taxes on. You must have paid taxes on at least $60,000 or above in order to qualify for this loan, as a company or as an individual. If you did not do that, you may not qualify. You also must be trending up. You must be trending up revenue-wise. Right? You must be trending up revenue-wise in 2022. If you are doing this, what I just talked about here, give us a call. We will, or visit peachcapital.com. We'll be able to get you $350,000 SBA loan that will close between 30 to 45 days. If you are fast and you have all your information together. If you have a CPA, you can put us in touch with them. If you have one of those softwares, accounting software, you may have to give us access temporarily just so we can help you get this done. All right? That's it for today, guys. This is what I wanted to just share with you about SBA loans. What I just shared with you here is not knowledge that most people know, but I want you to really get this. This is exactly what it takes, okay? There are a few minor things that I can't really share here now, but I want to tell you that your debt, this $110,000, if you have other debts like credit cards, all of that stuff, that this $100,000 will deduct from that as well to see what your net profit is. But you don't have to concern yourself with that just yet, because it's not really that important right now. Let's see if I can do that. I can erase with my hand though. Don't worry about that part, but just know that those are the main important things that you need to know about. Okay, let's go back. About SBA loans. I love this thing, guys. I'm going to be telling you a lot more. I'm going to be teaching you more on what it actually takes, so that you know that you're working with expert. You know, you're working with experts. I've been a banker, a financial advisor in the financial services since 2000. Yes, since the year 2000. Actually, no, 2000. Became a licensed professional 2003. Worked as a banker from this day to 2005. And I went on to start my own real estate and mortgage company. From that, right, real estate and mortgage until 2010, when I created Peach Capital, which started then as the company called Biz Bank. Right? Biz Bank became Peach Capital. So I have 23 years of experience doing this. So what I'm talking about is not something somebody told me, something I do every day, something we do every day in our business, and I want you to know about it. Okay, guys? That's the scoop on SBA loans. We'll talk later. All right, have a fantastic day. Thank you for your time.